everyone, and welcome. And with that, it is almost time to begin. We are very pleased today to be able to bring you Sean with Prediction Point Trading. We want to thank each and every one of you for your time and your participation here today. We do try to stick to the time schedule. We know that your time is valuable. We do try to keep it to the hour or less whenever possible. So again, we do want to thank each and every one of you for your time and your participation here today. Again, your host and presenter this afternoon, Sean from PredictionPointTrading.com. And then with that, it is at exactly 4:30. Please put your hands together, ladies and gentlemen, and please welcome from Prediction Point Trading. Please welcome Sean.
All right, perfect, thanks. Well, geez, the last time I had an applause like that was yesterday when I fell down the stairs and my kids laughed at me. But anyways, I know you guys want to get to the polls and vote, so I'm going to make this as long as possible. Well, thanks for taking the time out to join me today. I'm going to talk to you about something I developed several years ago that has held its ground every single day for the last 5.5 years. It's something that's very unique. I'm not here to make claims, so here's my happy little disclaimer here. But anyways, to get to the point, I thought I'd start off by introducing myself and telling you a little bit more about my experience in the trading world. That funny-looking guy on the right of your screen is me, and I've been at this game for almost 13 years. The long story is that I walked into the office of the owner of a mortgage company that I was working for at the time, and he had 3 screens on his desk with charts going, and 2 hours later I walked out with my first lesson on the markets. He traded cattle online. That was his primary game that he had going at the time. And from there it just became an obsession, and 6 years later I started a technical analysis school. A year after that I discovered Prediction Points, which is what you're here to learn about. And in 2008, I was invited by the ICE to speak on the Russell 2000 minis. I was a heavy Russell trader back then. Still do it to this day. Fun market to trade. And a couple of years after that, started a fundamental analysis school, different focus. Both those companies sold, and over that time, taught more than 2,000 individuals on a almost one-to-one basis how to trade futures market. Whether that's impressive or not is besides the point. The interesting thing about the history of that is that I had zero interest in teaching anyone how to trade. In fact, I didn't want to do it. Several years ago, I was involved in real estate investments, and I would get to the office early to trade, and as people were coming in, they would see me trade. I was in a fishbowl conference room trading, just kind of a hobby, obsession, like I think a lot of you do. And people would come in, they'd see me. Some days I'd make more than they'd make in a week. Some days not so good. But people were very interested, and they wanted to learn, and I didn't want to teach them. So long story short, several months later, there was about 30 to 40 people on a regular basis that would more or less beg me to teach them, and I started my first school. It kind of, the demand was filled by my supply, and it took off. It did really, really well. But anyways, to get to the point, I need to preface this by helping you understand where I'm coming from psychologically. I have a little bit different, unorthodox view of the market, and so let me just go through these real quick. First of all, I believe that far too many people complicate the market. For me, it's something that it's just not as it's not necessarily simple, but there's far too many things that people add to the mix that just are really unnecessary. I also believe in using tools that govern your trading rather than emotion governing it. It's somewhat comical to me how much time and books are written about the psychology of trading, when really, you know, if you're using the proper tools, at least from my perspective, you know, the emotion really shouldn't be a factor. Because if emotion is present, I believe that you're simply not using tools that you're confident in. I also believe that rarely, if ever, and this often causes a lot of controversy, do traders win trades because of their lagging indicators. It's something that Mark Douglas calls a design coincidence. It's actually quite funny if you think about it. And we could have a whole hour-long session about that aspect alone. But some of the things that I practice and or am a proponent of are predictive modeling, forecasting techniques, algorithmic high-frequency trading, quant and qualitative models, and a few other things that are probably a little bit too controversial to talk about here. So what I want to briefly explain to you is the prediction point story, basically how I come up with these numbers, and why they're so uncanny and why the market reacts to them. I'm not going to go through all the details. If you go to my website, predictionpointtrading.com, and if you just click on, actually just hover your mouse over products and then hover your mouse over prediction points and then click on story, you can get the details there, but I'll give you the gist of it. And basically the way that it happened is this. When I first started out trading, as I mentioned, when I was first introduced to the market, the guy I was working for taught me the Elliott wave theory. And that was fantastic. I loved it. I was obsessed with it until Elliott waved my money goodbye, pun intended. But it led into this obsession with indicators, and I developed several of my own in the process, and going from one indicator to the next and finding the next biggest, greatest thing out there. And I developed a lot of strategies. I spent a tremendous amount of my life really developing trading strategies for myself. And what happened over the course of time is that this led to theories. And so I had these ideas, really a lot of them off the wall. And I got made fun of a lot for a lot of my ideas about the market. What happened was I started to develop strategies based on theories. By the way, if you guys have questions as I go through this, go ahead and type them in, and what I'll do is I'll save them to the end. So I'll answer questions towards the end of this. I want to get through this so that I can cover all the details, and you guys, I think a lot of the questions will be answered as I go through this. So anyways, I developed strategies based on theory rather than based on what indicators were doing. And one of these, what a lot of people accuse me of being outlandish theories, was that the markets were controlled. And I believe that. I believe that to some degree they are controlled. And so what I started doing is developing ways to measure, something I call impact or vestation, where trying to identify areas where I felt that the quote-unquote movers and shakers, some call it big money, you can call it whatever you want, were vested. And so I developed a way to do this. What obviously wasn't 100% dead on because I don't know where everybody's placing their money, but I felt I had a way to do this. And so, but what happened, I spent several months at this, actually quite a while, and I spent much of my days and nights. I think my average bedtime was probably 3 o'clock in the morning. No exaggeration. I'd get up, in time for the next trading session. This just became an obsession of mine. And I got pretty frustrated because I felt that I had come up with the answer to what I was looking for, but the results that I was producing was not getting me what I was after. Yet I still had an effective way to measure this, but it made no sense. And so I got frustrated. One day I shut my computer down, I didn't open it up, and if you know anything about me, I've got charts going just about 24 hours a day. And the next day, this was at the time that Bernanke was fairly new. In fact, I think he was brand new. And I was pretty curious to see the market's reaction to what I would call Fed Day, FOMC Day, where they release interest rates, etc., and reveal the statement. And so I opened my computer back up, and sure enough, pretty much what you're looking at is what I was looking at. The market was doing this. It was bouncing off these price levels all day. Now, initially, I didn't think much of it. I was a little bit, I wasn't really skeptical. I'm not a skeptical person. If anything, I'm overly optimistic. But I, as I looked at the market that day, and to see from, even the Globex session, how it was bouncing off of these price levels, I thought, well, maybe I'm on the right track, but I'm just a day off. And so what I did is I altered my calculation minus a day so that it would produce numbers for the next day as opposed to the current day. And that really was the answer. And so about 3 weeks went by every single day running the same type of calculation, and it did the same thing every single day. At the time, I had a few people I was trading with. I called one of them up. I said, hey, check this out. What I want you to do is put these numbers on your chart, and don't call me until the market closes. He laughed at me, and insulted me, and because I kept coming up with ideas over the years, and a lot of them worked, a lot of them didn't work, and this was just way too far stretched and very, very unbelievable initially. So he did, and so the next day after the market closed, he called me back and he said, "What was that?" I said, "Yeah, that was pretty much my reaction." And so here we are, 5.5 years later. Didn't matter if it was the crash of 2008 or if it was, the end of the year in 2010. If you were trading back then, you remember the market was dead. I think on the S&P minis, we had anywhere from 3 to 6 movements between the high and the low tick, including Globex, most of those days. It was quite ridiculous. The volume was non-existent, etc. So it didn't matter. It picked up these intraday gyrations, as I call them, the ups and downs, very accurately. And so I always get asked, well, what are prediction points? How do you classify them? Are they, obviously there's support and resistance levels, but, how would you put them in the context so that a trader can understand what they are? And this is what I've come up with as far as the way that I understand them. And basically what they are highly probable, non-lagging forecasted price levels the market is expected to react to. So you have really 2 components. You have expectation and then you have probability. And obviously, as traders, we want to trade in probabilities because that produces the best results. And then you also have expectation, which is something that you expect to have happen. It doesn't mean that it will happen, but you have this expectation. And so they provide really 3 main things: foresight, and I'll talk about all of these in detail. And if you have questions as we go through this, again, you can type them in. I'll answer them towards the end. But they provide foresight, validation, and confluency. So let me first talk about confluency. This is something that you not only need as a trader, but it's something that you want. And so the simple definition, as found in the dictionary, is the coming together of people or things. As a trader, you want confluency in the market. In other words, if you're long, you want other people buying to drive price up. And if you're short, you want other people selling to drive price down so that you obviously make money, which is the objective of why we do this fun game. And so what prediction points do is they identify very precise areas where this confluency has a high probability of taking place. And I'll show you some examples in a second here. Let's talk quickly about validation. And this is, I think, where pretty much 100% of your interest in prediction points might fall. And what's really been nice about prediction points over the last 5.5 years is that traders come to me and they say, this is amazing because what I can do is really not change a whole lot of what I'm currently doing or what I've been doing for years, but what I can do is add prediction points onto my charts, identify my strategies when they line up with a prediction point, and the increased probability is astounding. So let me show you some examples. So here's really a typical day. And this was August 31st. I could have grabbed today. I could have grabbed any day. When I put this PowerPoint together, that was just the day that it was. So I grabbed that day. But this is the basic reaction the market has to prediction points. The market goes up and down all day long, as all of us know. And so what prediction points do is they identify those key areas of a higher probability where the market will have a tendency to turn. And as you can see here, they break down, they go back and forth. They'll test levels, they'll retest levels, and so on and so forth. And so when we implement these onto a chart, you have to forgive me, this screen might be a little bit blurry, but try to bear with me as I point some things out here. So let's take something random, or something that's very familiar, I think, to most traders. Let's look at a simple double bottom strategy. And so in a double bottom strategy, I think everyone might trade them a little bit differently, but I think for the most part, the concept is the same. And so with a double bottom, we're looking for an equal low or a lower low, and typically traders will look for something like divergence, or they'll look at an overbought or oversold type of indicator. And I know you're thinking right now, wait a minute, earlier on you said you weren't a big fan of indicators, of lagging indicators, and you're right, I'm not. What I'm showing you here is that using even something like that, when it lines up with a prediction point, can dramatically increase the probability of that trade actually working out. So I just threw up a stochastics. I do not use a stochastic, but if you do, here's an example. Here's a stochastic that's oversold. And at the time, we have this double bottom right here. So here's our low, here's our equal low, and this red line here, this is the prediction point. This is an actual day. And so that would be our entry. We're looking, so the parameters line up, and at the precise moment, that's our trigger. And we pull the trigger, and it runs. And this one ran for just over 5 points. It goes up to test these prediction points up here, and it comes back down, bounces to the tick off the prediction point, and then eventually closes here on this line. Another example, I used to trade market profile a lot. I still use certain aspects of market profile. I feel like I've developed some things that are a little bit more accurate than market profile, but I love market profile. If you do not understand market profile, don't worry about it. It's just a different methodology of trading the markets, and really has to do with market development. But that aside, in market profile, there's various types of things that market profile traders look for. One of those things being something called a single print. Obviously, if you're a market profile trader, you know exactly what that is. If you're not, just think of it as some type of support or resistance level, just to keep things simple. So this particular day, we had a single print at 1401.75 that had not been hit yet, and we had a prediction point that day, which is this day, at 1401.25. So just a couple ticks off. And so I happened to trade that day, and it was beautiful. This was actually March 21st of 2012. And so what happened was we had two big drops off of the prediction point, and that ran for more than 12 points. And we had two additional drops that missed it by a tick, which we're looking at errors here, not necessarily exact price levels. And those two ran for more than 4 points on that example. So very simple. We identified a price level in market profile that we want to pay attention to, and it just so happened that day that we had a prediction point that was within a couple ticks of it, and that gave confidence to market profile traders that use prediction points to get into that trade and pull some really nice profits out of. Let's say that you're more of a pattern type trader. Let's look at something very simple like a head and shoulders. This can also be applied to Elliott Wave, which is, it actually works quite well with that. But very simple. Here's the head, here's the left shoulder, here's the right shoulder. And so I think a lot of people will use some sort of fib retracement, and I think that question was brought up. No, prediction points are not fib retracements. So we're trying to look at the measured move and a target zone, and what we have here in the middle of the target zone on this day, it's a little bit faint here, but we have a prediction point at 1409 flat. And so that's our target. And so if we fast forward and look at the development of this, our entry on this head and shoulders, depending on how you enter, if you're aggressive, you're going to look at the right shoulder, that's being very aggressive, or if you're going to wait for the neckline, you're going to be somewhere in here. And it does take a little while, but we eventually get there to the tick. It bounces to the tick for a couple points, and then it comes back down, and then we have a guaranteed fill down here if this is not filled down here, or if it was a different type of fill order. And so that gave us a very pronounced target. So in addition to using prediction points to confirm entry levels, they can also be used for target levels, which has enabled a lot of my subscribers to really do the same types of trades they're doing, but pull a lot more profit out of those trades because now they have a little bit more realistic price level to look at. And really, that's the objective of trading. Anybody can get into the market, but how you get out of the market is going to determine if you are ahead or if you lose money. And that's what prediction points can do. Let's look at fundamentals. Let's look at the fundamental aspect of trading. I think the majority would understand or know or realize that when it comes to economic announcement types of things like FOMC, unemployment, a lot of those things really are governed and run by computers. It's very difficult to compete in. It's something that I have a lot of experience in. And so what prediction points do, this is an actual day. These are actual prediction points for this day. This was, when was this? This was April 25th. So this was Fed Day, April 25th. So I kind of broke this down here. So here we're leading up to the FOMC remarks. We hit this prediction point here. We broke it by just a couple ticks. We ran all the way up to this one to the tick, which was 6 points. This is the, by the way, the E-mini S&P 500. And we drop all the way back down, miss it by a tick. But again, we're looking at these as areas. Ran all the way back up, hit this prediction point again, and then we had a couple more drops here, and then we ended up actually closing on this prediction point here. And so I think if you go back and you look at prediction point reaction, a majority of economic announcements that happen, whether that be new home sales, unemployment claims, FOMC days, most announcements like that will act astoundingly with prediction points, just like you're seeing here. Let's look at this past one. Today is Election Day, November 6, 2012, and we just had a Fed Day recently. Let's see, it's right here. This was October 24th, just a couple weeks ago. And so here we are. This was the development pre-FOMC release. A couple hours after market open, we had a nice to-the-tick bounce off of this prediction point, 6.25. And then so here's when the mayhem gets released. So what happened is as you can see, we start up here, and information comes out, market goes ballistic, contract volume increases astronomically, and we wick down here really fast. This was quite fast, if you remember, and we had a nice what was that? Almost 5 point bounce off of this prediction point here. You would have took about 5 ticks of heat had you played that one, and then by the time we come through, there's just not enough momentum to get us back up to our high that we hit just right before, or we're actually right at market open that day. And so what happens is we melt through this prediction point. And it's the common knowledge that what once was support now becomes resistance, etc. And so that's what we're looking for. And this is actually a strategy I talk about on the members area of my website. And so we melt down here. And so now what we're looking at is we're looking at new targets. We're looking at, basically a battleground. Where are we going to do battle, metaphorically speaking? And so what we have here is we have these 2 prediction points down here. They're actually very tight, which is actually quite significant. It's something I teach subscribers to look for. And so we're down here doing battle, meaning, what direction is the market going to go? So if we're short here for whatever reason, we're going to look at potentially getting out because there's going to be a lot of tug of war between buyers and sellers happening here. And because these prediction points are tight here, it's even more congestion is suggested. And so that's exactly what happens. We bounce. We have a very difficult time getting past these price levels. So this could be either an exit target for profit on a short position, and or the reverse, a long position. Market closes here. This is Globex starting right here, but this is what I got a tick away from that market close on this particular day. Okay, and so here we are back to our typical market day. This is exactly what happens. The market does this every single day, day in and day out. It goes up and down all day long, and what prediction points do is they quote-unquote predict where these, I like to call it gyrations, will actually be, where these battle zones, so to speak, will take place. And they're highly probable, as I mentioned before. Let me go back to that slide real quick. So prediction points, again, are highly probable, non-lagging, forecasted price levels the market is expected to react to, and they provide foresight, validation, and confluency. I talked about confluency and validation. In a couple minutes here, I'll talk to you about foresight. It's a really interesting, I even call it a phenomenon with prediction points. So let's talk about that. What I want to do is show you how prediction points are released. So traders that subscribe to prediction points, there's a couple different ways to receive them. Right now, as you can see, if you go to my website or if you just look at your screen here, this is a snapshot of my website. You'll see on the left side some fairly well-known companies, NinjaTrader, Sierra Chart, MultiCharts, and Investor RT. So these are the softwares currently that are compatible with prediction points. In other words, subscribers that use any one of these types of software, you can get them automatically populated onto your chart. So you don't have to manually go in there and enter in a bunch of horizontal trend lines or lines every day. So I should mention multi-charts in InvestorRT, they're almost done. They're just finishing up the programming. But NinjaTrader and CR Chart are available now. You can get them automatically populated onto your charts every day. You just open it up, and it will automatically appear every day. And if you end up subscribing, and I'll go over those details at the end here, but and if you use a different type of software that I don't have listed, just let me know, and I'll work with that company to get them provided. But basically, here is where they're listed, and all you need to do is click on a date, and what happens is a pop-up box opens, and it will give you the prediction point price levels for that day. What I do in the members area, currently I do not teach. I don't have a system that I teach. I don't have nothing like that. I provide these price levels that are highly reactive. I prove it every single day, and a majority of my traders use them in conjunction with their own style of trading. Some traders will develop their own strategies around them. But what I do, though, is I provide some really great insight as to the market's, how the market develops around prediction points. So earlier I had mentioned one of the things that they provide is forecasting, and this is really interesting. So basically, it's literally this simple. If prediction points are close together, we can expect consolidation or something that I call congestion, and I go over that whole topic. It's a very powerful piece of information to know. And I kind of showed you an example of that, where in this example here, where we had prediction points that were pretty tight, which basically suggests, there's a little bit more detail than this, but it basically suggests that the market's going to have a hard time getting through that. It's going to do a lot of battle back and forth and maybe congest for a while or consolidate for a while before it actually moves in one of the directions. And it's very insightful information to know, especially knowing the exact prices that it will happen at. Okay, and so I talked about that. So back to forecasting. Furthermore, if prediction point price levels are further spread apart, then it gives us an indication of the type of movement we can expect. And it happens every single time. If prediction points are wider apart, then we can expect bigger movement. And it's pretty amazing. The first day that I realized this, I didn't understand. When I first discovered prediction points, I knew that there was something to them, but I obviously didn't know how to exactly use them because I had just discovered them. And so one of the things I quickly found out, especially in 2008 when the market started to tank, it was really interesting because I was running the numbers for the next day, and I had massive, we're talking 10, 15, 17-point gaps between some of the numbers. And I thought I did something wrong. I was actually pretty frustrated. And sure enough, that next day, if you were trading back then, the market fell apart. It went ballistic. And what happened is we kept bouncing off of these prediction points all day long. That was probably one of the funnest times I have ever traded, probably in my life. It was a riot. And then lastly, I have a page called Strategy Exchange, and I give you some additional ideas on some things that you can play with prediction points. I went over the head and shoulder strategy. It's one of the most basic strategy, patterns that anyone could learn. I would venture to say every single one of you in here understands that. But combining that with prediction, I have a trader. He emails me. Well, he emails me every day, but usually, I don't know, 2 or 3 times a week, he'll tell me which head and shoulder trades he makes, and he'll send live screenshots, and the guy kills it. I mean, it's amazing at what you can do. And remember earlier in the beginning of this, I'd mentioned that one of my beliefs is that traders completely overcomplicate this game. I call it a game. They completely overcomplicate the market. It's so much simpler than I think most people realize. By the way, a lot of people ask me, my trading charts look like this. I don't use indicators, I don't have any oscillators or moving averages. This is exactly what I use every single day. And there are specific areas that I look for, and I get this question asked a lot. I'm going to cover it now because it gets asked all the time. I will be releasing my methodology of using prediction points in January, and those that are subscribers will get a tremendous discount on that. It's very unorthodox, but it's very, very effective, and I'm creating the content for it now. But anyways, that comes up quite a bit. So back to this. So just a couple of ideas to further enhance the usage of prediction points. So what I want to do now is open it up for questions. There's been quite a few that have been typed in here. So what I'm going to do is go through those right now. As you have questions, if you want me to back up to any of the slides, let me know, and I'll cover those. So let me back up to the first one, and I'll go through each question in order. Okay, do I have any examples of longer-term charts? So the way that I trade is I use, well, first of all, let me answer it this way. Prediction points are a daily thing. So, if there's any numbers that the market didn't quite reach, they expire. They're done. They're no good for the next day. It's a very, very precise day-by-day calculation that I run. So, in other words, today's numbers have zero significance over tomorrow's numbers. They're a completely different set of numbers for tomorrow. So as far as like different time frame charts, when I trade the S&P 500, I usually use a 1 minute or a 5 minute chart. Well, I kind of use both because I already know the price levels and I don't really need additional time frame to make a decision because I already know what I'm going to do far in advance. And the reason why I like a shorter time frame chart is because I guess psychologically I don't have to wait as long for a 15-minute bar, for example, to develop. But that's not to say that you couldn't use a longer term chart. You can use whatever time frame chart you want to. Okay, so market and time frame are showing that was the S&P 500. So right now, this is a manual process I go through to calculate prediction points. It's actually quite cumbersome. I've gotten a lot better at the quickness of time. So right now, I provide prediction points for the E-mini S&P 500 and the Russell 2000 minis, just those two. However, in January, I'm going to be releasing a lot more. And so I'm just working on the infrastructure to support that. This is a snapshot, but just go to predictionpointtrader.com, hover your mouse over products, hover your mouse over prediction points, and go down to uses. And then you can choose the S&P or the Russell. And what I do is I post, I'll post today's numbers a little bit later, so you can see what the numbers are. You can actually, there's a video there you can actually do some testing on. You can actually test them to see exactly how they work with your style. But you can just go there. This is not the page. Just go down to uses, click on uses, and it will give you the option to choose the E-mini S&P 500 or the Russell. Just a quick question before some people have to go. Yes, to subscribe, just go to predictionpointtrading.com, click on subscribe, or just type in this URL. And when prompted, enter code NOV, that's lowercase NOV 12, and that will give you a $50 discount off of any of the subscription options, which is a one-time discount. So not per month, but a one-time deal. Okay. So it looks like this. So just go to predictionpointtrader.com, click on subscribe, and it'll give you three options, the ES, the TF, or both. So that's how you do that. And just make sure you enter that code in so you can get that discount. Okay. So the levels that I calculate are based on what I had mentioned earlier about vestation, as I call it. But more impact. I basically, developed a way to measure what I call impact. If you actually go to the main page of my site, I have a video there that kind of explains that a little bit. It's kind of hard to understand. It was the best way that I knew how to describe it without obviously revealing my method that I use to calculate them. But it will kind of give you an idea of the awkward way that I look at the market. Yeah, the background shading is just the way it's showing up on the screen. I don't know why it's doing that. I think it's just software, but it's not. Yeah, it's not shaded like it shows. It looks different than that. So crude oil, that is crude oil CL. That's one of the indices that I will be releasing in January. So very soon. So if you do trade CL, you can either check back January 1st, or you can send me an email at support@predictionpointtrading.com, and I will put you on that list and notify you when they become available. And you'll also be able to do some testing on whatever markets I release. You'll be able to do some testing prior to subscribing to see how you like it. Yes, I did cover my background and how I come up with prediction points at the beginning. So if you were late, I will be sending out an email. I do have this recorded, and you'll be able to watch that again. Yeah, a lot of questions on CL. It's a heavily traded indice, so I think you guys will like it. How many trades a day on the ES and TF? That's going to, obviously the answer, of course, is it depends. But really what it depends on is the type of strategy a trader is executing. And so because at this point I don't, I don't tell you where to buy and where to sell. I mean, it's really going to be up to the trader on, what method they use to trade them, whether it be to simply combine them with their current style of trading or to do something a little bit different. More volatile days, we're going to have a lot more bounces between price levels, and a little bit more, I guess, chill days, it's going to be less. So, but to give you an exact answer, typically you're going to see anywhere between 4 to as many as 12 or more trade opportunities with prediction points. But keep in mind also that, they're not just good for entries, but also exit. So depending on how you're entering the market, they can be used for, exiting the market as targets. Yes, so just to reiterate, prediction points are available on the TF, which, if you're not familiar with that, is the Russell 2000 minis, and the ES, which is the E-mini S&P 500. So the question is, what is the difference between prediction points and support and resistance levels? So support and resistance is the mere occurrence in the market where you have supply and demand. So there are lots of different types of support and resistance. Fibonacci levels are a type of support and resistance. Pivot points are a type of support and resistance. I mean, the list really goes on and on and on. So prediction points are support and resistance levels, but the way that they're derived is very different than anything else that I've seen in the 13 years I've done this, and that my subscribers have also seen. So in January, the comment here is, will releasing the formula to the general public in January change how effective they are? So I'm not releasing the formula. What I'm releasing is my methodology of trading them. Over the years, I've developed some incredibly effective ways. I'm also going to be revealing some tools that I use that I honestly have not shown anyone. I've been kind of selfish about it. And to be honest, guys, when I started Prediction Point Trading, I taught for 7 years people all over the world how to, different trading strategies. And to be honest, I was done. I wanted to spend more time trading, and that's what I intend to do. That's what I've done, the last year and a half or so since I sold my last company. But I get emails literally daily on that very question. Will you teach me some strategies? Will you? And I do have some things on the members area that I do share and that are very effective. But as far as my method, no one knows about it. I do have one person that does, but beyond him, nobody knows. So I have a very unique way of doing this. I use some other tools that I've created that are incredibly effective, some other predictive modeling to get an idea of the trend for the day in advance of it even happening. I think it'll freak some people out, but so I'm working on creating the content for that and making that available to traders. Yep, I agree with that comment. The comment is when fundamental news comes out, buyers and sellers will do buying and selling at will. They can run over so-called prediction points easily if there are no huge money defending it. I agree with that statement. In fact, trading announcements is very risky, even with prediction points. A majority of announcement trading is run by computers. If you look up Deutsche Börse, if you're not familiar with them, they're the company that has been trying to buy the New York Stock Exchange for a long time. They were my previous partners in a product called Alpha Flash, which is an algorithmic way of trading announcements. It's not cheap, and you need a lot of money to do it, but you can look them up. Their company that does that is called Need to Know News. They were my previous partners in my last company that I ended up selling, and you can see it right there. A majority of those time frames are run by computers. It's very difficult to compete with. The reason why I showed you that is just to illustrate, earlier on when I showed you the fundamental side of prediction points, was to illustrate the market's reaction to prediction points at those specific time frames. More times than not, which doesn't mean 100%, but more times than not, you will see and you will find that prediction points have a very uncanny reaction to fundamental announcements. And the reason why is really based upon the foundation of the development of prediction points, which was to identify these prominent price levels that, again, as I mentioned before, I felt were somewhat controlled. And so I developed a way to measure that, and it's, anyways. Yeah, sure. So the comment here is, can I talk about more about how traders overcomplicate the market? A lot of ways, and we could do a whole hour-long, conversation about that. But what I find a lot of traders doing in the time that I've been involved in the market, I've done it myself, is a lot of traders tend to go from one thing to the next, to the next, and the next hottest this or the next hottest that. The next indicator that does X, Y, and Z. I have some, the reason why I'm a proponent of high-frequency trading is because I'm partners with a high-frequency trading company. Anyways, what traders tend to do is they go from one style of trading to the next. One indicator to the next. I mean, any indicator out there, you could pretty much bet that I've played around with. Obviously not all of them, because there's far too many, but what happens is traders will, when you run strategies for any period of time, and in the process of strategy development, a lot of traders will run into the issue of overfitting. And so what will happen is, you'll find something that works, and it works every day, day in and day out, week in and week out, and then all of a sudden one day it stops working. And so what happens is, what the trader will tend to do is they'll try to adjust it based upon those times where it quote unquote doesn't work. And so what this leads to is overfitting. And so what they have is an imperfect process or methodology of doing really what initially started out as something simple. I had a trader years ago who, he was phenomenal. I mean, he'd pull out about 20 grand a month on a very average month basis, and he just became obsessed with creating different strategies and different indicators. The guy was a genius. I mean, he developed. He got down to the point to where he developed a program that would send a text message to his phone to give him a 5-minute heads up when a specific parameter was developing, so he had time to get down to his computer to execute the trade. And then it evolved to that, to having it automated. I mean, it was amazing what the guy would do. And he fell into that same process. And eventually, long story short, he ended up losing just about everything he had. But that's one example. And like I said, we could go on and on and on about that. But there's so many different ways that traders tend to do that. I showed you my charts. My charts consist of prediction points and candlesticks, and I do use bar charts from time to time. but that's it. I have very specific price levels that I'm interested in, and if I'm not trading to that, then I'm waiting for the market to develop around there, and as long as the parameters look good, I'm in. And then I'm looking for the next area, and then I'm out. And it's very, very simple, very concise, and it's not complicated. I don't get emotional about it. I pull the trigger and execute it. You know, when you trade, you fall on, obviously you're accepting the risk, and the way that I do it is just very simplified and non-emotion, has no emotion in it. Okay, so again, we could go on and on about that, but there's a lot more questions here. Okay, so here is, you'll see in just a sec. Okay, you should see charts. So this was today. This is NinjaTrader. Let's go back to actually market open. So I'll walk you through this. So here was market open, right around here somewhere. We developed between these price levels. Held some very nice. Oh, actually, let me first of all cover the overnight session, the Globex. Okay, so what you're looking at is Globex, and so we initially broke this 1411 quarter by a point, it looks like, so 4 ticks. So this is kind of what I'm talking about when price levels are close together, how the market will kind of consolidate around them. So we get up here, we miss this one by 1 tick, and then we come back here again, price levels that are close together create this congestion or this consolidation, and so the market's going to do battle right here, and this is where we have a lot of interest. And so we're going to come up, we tested this only for a couple minutes before we broke, and then we get to the tick of the 17.5, come back down, we miss this one by a couple ticks, and again here, so here's a nice double top. This would be a great example of a double top that you could have took, and then, you know, perfect target. We did break through it a little bit here, but, you know, guaranteed fill on that short. And then over here, the market starts to develop. And so here we are, you know, the market's really trying to decide what direction it's going in. It's having a hard time breaking this 14.75 level. So that's an indication that we probably want to look to the upside. Anytime you see that failure to the downside, and the reverse works as well, we want to look for the opposite position. So we're looking for opportunities. So we didn't quite get to the 14.20 and a quarter. We missed it by a couple ticks, but we want to be cautious of that and be aware of that, knowing that here's some support in here, and you can see it's, you know, they don't always bounce perfect, but we're looking at price areas. And the reason why we look at price areas is because the reality of getting filled is the reality of what it is. You know, we're either going to get filled on or around that price level. And so we're keeping an eye on this one. And so what we have here is 20 and a quarter up to 26 and a quarter. So that's a pretty decent sized gap. So if we're going to break long, if we're going to break to the upside, I want to pay attention to that, because there's a good chance that we very well could have momentum to fill that. And so this is my target I want to look at. We had a little bit of a pause here. Again, this is a 3-minute chart, but we did, and we broke it. We halted for about 6, 7, 8 minutes here, and we broke it on to the next one, and we actually didn't quite make it. Let's see. No, I can't get it. It's not letting me. But we did have one a couple ticks up here. It's just barely off the screen. We didn't quite make it, and that can happen sometimes. And then, you know, by this time, obviously what you see is what happened, and this time the market's closed. So we're identifying different ways to trade this. So, you know, if you look at it like a tick chart, you could pick out a head and shoulder pattern in here. You can't see it here. And so there was a decent call for a short here, you know, paying attention to this red line here, which was, again, 6 and a quarter. But that was today. So tomorrow, if you want to sneak peek, these are tomorrow's numbers, some of them. Doesn't show you all of them. But those are some numbers that we're looking at for tomorrow. And so they adjust. So yesterday's numbers, no good. No good for Globex and no good for tomorrow. So we're looking at these price levels for tomorrow. There's some above, some below. You know, in the event that price gets there, you want to be prepared. But those are a couple numbers that you can see that we're looking at tomorrow. 15, 17, 19. And by the way, I do not give out numbers to non-subscribers, but they're here, so go ahead and write them down. Let's see. Okay, so that's that. Let me go back to this. We'll wrap this up. And just a couple more questions here. Do I have any automated strategies? Yes and no. The answer is I've got some other partners in the high frequency trading world. We do have a product. You can look it up on my website. It requires quite a bit of capital. I mean, you really need a six-figure plus account to do it. But as far as automated strategies with Prediction Point, I'm actually in the process. Working with another high frequency developer, unrelated to high frequency trading, but developing an automated way of trading my method. Don't have a release date for that, but full disclosures, when it does come out, you'll be able to look at live statements, performance, etc. So it's pretty dang cool. Okay, so that's that. So yes, prediction points are for U.S. markets only, but I will be releasing some European markets in January. So stay tuned for that. Do not have a list of which ones, but you can always send me an email and I will put you on a list to notify you, or you can just stay in the loop by subscribing on my blog. Yes, so the comment here about JPR. So yes, the numbers are for a day, and so what you're looking for is clarification on what I say on my website. February 8th, 2010 could, will, and does affect March 30th, 2011, and every day in between. Furthermore, they can show weeks and even months in advance. Yes, that is true, but I only release the next day's numbers. So basically, I have all of the numbers for the remainder of this contract. As soon as I do next, March's contract, I will have all of the numbers for every day of that contract. But so as not to have them exploited, I only release the next day's number. This week, however, I'm doing some traveling, so I have every day of this week already released to my subscribers. So tomorrow's release, Thursday and Friday, they're already done, and they won't change. So that is correct. No, I do not take account time into my trading. Time, to me, as far as the way that I do it, has zero significance. Oftentimes, that is actually something I talk about on my website. The question is, if one of your levels fail, do you reverse and go to the opposite target? A lot of times, that is a really effective strategy. Something I call a wait and break, and there's some very specific parameters I look for to do that. But yes, that actually can be very effective. So the significance between the orange lines versus the red lines is the question, and there's almost, well, I shouldn't say there's no significance. There's two types of measurements I take. Red tends to be, kind of more your boundary lines, but it doesn't always happen that way. And orange tend to be more of your interim ups and down type of lines, but it doesn't always happen that way. My recommendation is for traders to use both of them, one and the same. Some traders, however, will develop strategies based upon red lines only, but they're really similar. Yes, the question is there a set time the prediction points will auto-populate in NinjaTrader? Because I do them manually, it's going to vary day by day. I try to get them done, within 1 to 2 hours of market close. It just depends on my schedule, but it's usually in that time frame. That's an interesting question. It's really a complicated one. So the question is, it's about stop losses, and this really goes down to the method. And obviously, it's the ever popular answer that everyone hates to hear, but it depends on your style strategy that you're doing. But to give you my answer, I will use, sometimes I use a very tight stop, not often. If I'm looking for a very specific level to hit, that I'm anticipating a complete turnaround, I don't really need a very big of a stop loss. A point or so, but generally I'm going to be anywhere between 2.5 to 6 points on some of my strategies, not all of them, but that's kind of the extreme. So there's definitely a range, and it depends on what type of strategy I'm executing. So the code, quote unquote, is good forever. Yeah, if it's good today, it's good tomorrow. I'm not going anywhere. There's no bribe here. The code that you see on your screen, NOV12. Do your research, check it out, look at the price levels on my site and, take your time if you need to. There's no pressure to subscribe, although there's going to be some nice opportunity tomorrow, so you might want to think about it tonight. Just kidding. Okay, so at the beginning, somebody was asking a question about the time frame of this. This, I believe, that's a good question. I think that was a 1-minute chart. I'd have to look at the actual chart itself. It's cut off there. I don't know why the time cut off. Yeah, it's probably a 1-minute chart. Okay, got a lot of questions, guys. Hey, by the way, if I don't get to your question, you can send me an email at support@predictionpointtraining.com. I'll personally answer it. Daniel, I use a paper and pencil, but I have a very specific chart setup that I use to actually derive the numbers from. So the question is, do I use a calculator, computer, etc., to give me the numbers? I use a pretty unorthodox way of doing it, and I write down the numbers from what I see based on the way that I've set it up. Okay, all right, let's go ahead and wrap it up. If you have more questions, just send me an email to support@predictionpointtraining.com, and I will personally answer your questions. And again, thank you for taking time out of your election day to learn more about Prediction Point. I hope to see you in the members area. And again, if you have any questions, feel free to contact me anytime.